Welcome to Trading Lounge and the Australian report for the 26th of November. Just before we start though, just to let you know that our servers at manage.com are back up and running, and we still need to do a lot of work. We need to change the DNS domain name servers back to tradinglounge.com, so that takes a good few hours to occur. And then we also need to get our emails up and going as well. We haven't been able to receive or send emails on the Trading Lounge email server for a week or so. So if you haven't heard from us and you use that email, well, we'll eventually get to it. So apologies about that, and thanks for your patience. So I would imagine by tomorrow that we'll be back in sort of full swing back on tradinglounge.com. So it will be a little bit intermittent today and this evening. So just bear with us. But just to let you know that there's positive news on the website being put back up very shortly. So we need to update all data and all sorts of things. So anyway, tomorrow we can expect to be up and running. So today we'll still load stuff up on the tradingloungeroom.com, and then as soon as we get access to our website, once the DNS servers come back on, then we'll load up to tradinglounge.com. Okay, so the ASX here is pretty much in line in its own way with the rest of the world, where we're looking for wave 1 to the upside and wave 2 to the downside, and then up for wave 3, 4 and 5. So a long-term bull market still in play. It's kind of hard to believe with the world in debt. There's something like 52 countries that have got over 130% GDP debt, and you don't come back from 130%, 130, 135%. You know, it's very difficult to recover from that point. You could probably do it through innovation and technologies. That's why we'll be tracking those technology stocks. So that could pull us through if governments, support that. We don't see that support that much in Australia. We're starting to see parts of it, but taxes on EV vehicles and so on, they just don't get their head around it. They're just not moving forward. It's still a mining town, which is just a little bit unfortunate. But we'll see how the new government in the US go. But a bull market, why they pump more money into the system, and it doesn't matter who's in power. That money still needs to be pumped into the system because people expect it to. But that's the that's the thing, isn't it? That's another story. This is where we are. I mean, when I look at this chart here, I've got wave 4 sitting here, but it really sort of, irks me a little bit, because it really looks like we should put it here. So we'll bear that in mind, and but what we also need to do with this run to the upside, we need to tie it into the US markets. Now, most of the time we follow the US markets, but sometimes we don't. We can be out by a few months or something. So, these things we need to sort of work a little bit. So I'll be mindful of all those events. But the good news is that we've got higher to go into this run, and coming into this top here would be pretty much the same top coming into CBA as well. So if we can just have a quick look at CBA here, and we'll look at BHP again as well. So coming back into at least this top here for the B wave here, for this top of this third wave. So this is a completely different count than the ASX, of course. But to me, it's the best fit. Anybody got any ideas? That's all good too. Send them through. But obviously resistance at 90 in that case here for that. So we'll also get resistance up here, of course. That comes into my number 72, so 7,200 for that number, for that level. let's dive in and take a closer look at this. So yeah, look, as I mentioned, we've got wave 4 sitting here, but I think there's a good case for it to be sitting over here as well. So we'll just be mindful. Remember, that's when the banks took off from that point, and this is when this lifted off as well. It's just that this was the high here. I suppose that being a B wave here, we probably could squeeze this as 1 and 2 and 3 and 4 and 5 for the top here, then have an A wave and a B wave here. It doesn't look like the high there, but it is on the cash, and then having a C wave down here. So, and then look at that as wave 1 and back for wave 2 here, and then going up for wave 3. But I've tied it in with the US markets, with wave 4 being here, and the US markets, we're looking at this as wave 1 and 2 here, but also with the US markets, we're looking at this as wave 1 over here with a pullback for wave 2, more like an A wave, a B wave, and a C wave. I don't think it's the case here because we're seeing BHP and CBA move up together, and when that happens, then the ASX, really hops along when those two finance and resources move together. They don't often move together, but when they do, that's when you see a powerful move in the ASX. Well, of course. So let's just go in and see what we've got here. So this was the other count, looking at it, well, like this as 1 and 2 and 3 and 4 here, and looking up for wave 5 here. I kind of don't like this count because this is such a long wave structure here compared to the other guys. I can see that it works in one model. What the model would be that we've got this length here, this one's longer, and then this one here is becoming longer again in this case. Well, certainly in amplitude anyway. So it is expanding rather than shrinking, so to speak. But my main focus, whatever the count is, that we're just really focusing in on this structure here. So even if I've got this as 1 and 2 here, this is what I've got the US in as well. But I can't confirm this just yet. I still have to wait for this in the US to have another little high and do a few other little dances before I can confirm it. So I'm just working both of them. But like I mentioned, our main journey here is looking at this as 1 and 2 and, well, 3, 4 and 5 coming up into this space here. So as far as the count goes, and we picked up yesterday, let's just clean a bit of this up here, but we're pretty much on track. So we're looking at wave 1 here and 2 here, then 1 and 2 and 3 and 4 and 5. I did have an extra little wave in here. Maybe I can tie that in with wave 1 and 2 here. But otherwise I've got wave 3 here, so I'm just going to dull that out, and I still need to resolve that, but that will show itself, that will reveal itself in due course. Our main journey here was looking at wave 4 pulling back, so we can assume that that's in there at this point. Let's just clean these up. So in a nutshell, we're looking for I suppose this wave 4 can get a bit uglier. We could also come down here a bit, again onto the trend line here, and then move up from that point. But if not, we're looking for a 5-wave sequence up here higher. The extension's in wave 3, so we can look at wave 1 here being that distance here, putting it on here. Now it makes it a little bit short, so in that case we could probably take 61.8% of this structure of wave 3 here. Bring that down to there roughly. I just got a weird way of doing things, that's all. It's not always by the... Oh, shite. Lost the plot there. Just getting an upside target, that's all. But so that can go to there, then just support it that way. That's 1618, so that could maybe just come up into that space for that, so we just need to be a bit careful about that. I think it would reach the 6.8 though. That's the main thing. So as I've mentioned before, our target is the 6.8. So it's just a matter of hanging in there. Let's just go to the 15-minute chart for a moment. Okay, we can tidy this up a little bit. Let's just check that wave 4 is down here. That's about 38 there. So that's still a bit, that's too low. So 38.2 would probably be about 40. I'll just check it. Just be a bit lower than what it is, but it's sitting on the 50 here, which is good. Roughly in there. Yeah, just a bit lower, but that's okay. I mean, but yeah, I mean, that's technically speaking the wave 4 of 1 lesser degree and the 38.2% retractable. So that could still come there, and because Thursday's got a habit of opening higher and then closing lower for the day, so we just need to be a bit mindful about that. Let's just look at these things here a bit closer. I have to say it looks impulsive. There's no overlapping wave structures. What have we got here? 1, 2 to that point, you reckon? An A and a B and a C here. 1, 2, 3, 4, 5. So that makes a nice ABC at that point. I'll just put that in. But I mean, that it just means that it's hopeful. It doesn't mean that it's true. In that because it may just get more complicated, you know. I mean, all of this down here just might be the A wave and the B wave and the C wave coming back here. We don't know that yet, but what I was just saying then, this here being the A wave here, that the B wave and that the C wave in 5 waves, that can be there, you know, and it's pulled back, as I say in Australia, near enough is good enough, or the 10 mil rule in building. But that looks impulsive to me. So I think we're on the right track here. But the safe trade is obviously having support on top of this level here. So the arrival, the reaction, the first high above the level, and then you can move in on that second high there. Put that there. That's the safe trade. If you're already long, well then that's fine. We can just look to add to this, and we'll look for another. You know, we're looking up for wave 5 into this of 3 up here. I think, yeah, and then we're going to be looking at, in a nutshell, one way or another, we're going to be looking at 5 waves to the upside, be something like this, and then we're going to be seeing this come back to the, or I'll bring it back to the wave 4 of 1 lesser degree, but we know that it may not, it's showing its fingerprint here, or footprint, DNA, whatever, that's not quite pulling back to that point, but that's what we'd be looking at that point there. I mean, I think it's, even if you're trend trading, I think it's fine to take money at number 8 and then just buy back in. Don't kind of think of it like this. Think of it like it's going up to 8 and then coming back to 7, even though it could come lower. But even if you're buying at 7 and it does come lower, you know, and you're going for the trend, it doesn't really matter at that point. Do you know what I mean? So, or you can wait and work the trade. It doesn't really matter. And also too, within here as well, if you want to get, we've got all the levels in here. So we've got 10, 20 and 30, and then 50, of course, and then group 2, which is 65, 72 and 80. So the 1, 2 and 3 in a bullish market, these are the ones that you build into. If you get a bit nervous, you can take profit here. You can also, once you get a classic trading levels pattern on 50, then you can also add to that, because if it gets onto 50, then you're going to get up to 80, and possibly you'll get up to the last number, but that's really where you want to get to. So breaking a problem down from in each 100 points or each 1,000 points, depending on what index or market you're trading. 1, 2 and 3 is to build the trade, and once you get support on number 3 here, then you know that you're safe. then you got, you know, half a silly chance of making some money at that point once you get tested support there. So to get 4 trades in this space here, then yeah, that's the go. And then you can also add on top of this if you want to. It gets a bit top heavy, and you know, you've got to have a bit of intestinal fortitude to do that, because you're stacking on top here. You know, you're creating a pyramid for yourself. But it'll pay off if you start taking the profit out. I like to take it out at 72, and then if 72 becomes the support, then I'll move back in again as well, and then go up to the next level. But it just depends if you've got the time to do things and you're at the screen and all those sorts of things. Day trading is quite intense. It's really just the first hour. When I used to trade this market in the futures contracts, I wouldn't really place a trade after 11:15, and then I'd come back. Then the volume would come back anywhere from 2:30 to 10 to 3. I don't know if things have changed, and then you'd be back in doing the afternoon session, and then the futures market obviously runs to 4:30. The cash market closes at 4 o'clock. So at about 5 past, anywhere between 3 and 8 past, well, probably, yeah, around 5. I have to check again. Macquarie Bank, they do a lot of hedging, so they would release all their hedging sort of just after the cash on the cash market close, and then they'll take it off the futures market. And then once they've done that, then the market used to run quite nicely right up until, well, not quite 4:30, because the last 3 minutes got really choppy, but you can normally get a nice run in that 20 minutes to pick up quite a few points in that thing. But you really need to be on the ball, and trading on the tick chart was really where you need to be at that point. But yeah, I see the Australian futures market as a bit of a poker table, really. And the last time I was sort of playing it, you know, you'd have Broker One and Man Financial and Morgan. So you got to kind of figure out who was the dealer, who had the most contracts on, and we used to be able to know that when the old fuddy-duddies at the ASX exchange bought the Sydney Futures Exchange. When the Sydney Futures Exchange there, all the retailers used to be able to see the broker codes, and then they took that away. They've really done a horrible. I think they've done a horrible job from a trader's point of view in attracting people to the market. You know, they're not very transparent. They're this is why CFD traders, they can't put in the market at the beginning. They can't put buy on stop in market orders to get into the market, because the exchange doesn't have the technology to place those orders. So yeah, it's just a little bit backwards. But Australia can be like that at times, as much as we love it. And I'm certainly not complaining. I like being here, living here, being a part of it. Alrighty, enough waffling. Thanks for tuning in. Oh no, I just want to have a look at BHP as well, don't we? So, and iron ore. So let's just start with iron ore for a moment. Let's just check on that. So, iron ore. Yeah, a bit of a concern with this here, but it is looking bullish, and it is getting support above here. We are seeing an impulse wave up here. I know that this hasn't finished. It's like it's finished in 3 waves here. So I know that this can be an A wave here, a B wave here, and a C wave to whenever that finishes. So that's always sort of haunted me a little bit in that regard. So we're not sort of out of the woods yet, but getting support on closest largest number here is good, and also the 30, which will be the top of group 1, that's also really good. We don't have support on that yet, but getting support on these numbers up here would really tell me that we're good to go at that point. You know, we'll be moving high from that point. And I'll just look at copper as well. So copper's still like trending up nicely, and I can still see, I haven't got it labeled here as a daily chart, but I can see that we can just look at this as 1 and 2 here, and the third wave still moving. So once we get support on 72, which it's trying to do at the moment, then that will push higher. So that's all looking good. And crude oil as well. This is really expanding out here now. So we could look at this as wave 1 and 2 here, then 1 and 2, and then looking at a third wave here. This has still got further, I can just see this has still got further to push up here for this. So we can take that up to the 4,800, no problems. But of course, in this here, this would be a long-term goal here at the $50 mark. So just put that in orange there while we're there. And the 48, copy that, the 48's that minor level there, and then the 45 in here is the critical one. So between, this is a medium level here at this point, so we can just pop that in there. It's good having the levels because they break down the problem, and then the problem, once we get support on here, because that would be the long trade above here, after the retesting and checking. So it's got support on the closest largest number, which is the medium level. Then you got 1, 2, and 3 here, and then 5 and then 8. So it breaks the problem down, and that you're heading up to this area. So that's good for BHP. So let's just bring up BHP here. So that's all good here. So we're really looking good here for this. As I mentioned, I bought a little bit the other day back in this little space here. But in terms of our trade, we've got half a position here. You may have a second half a position in here. You may have gotten in here today, and you're probably up, yesterday up there at the open. That's okay. This is going to bounce around a lot coming into this level here, but we're just going to keep building here. Once we get support on the 40 here, what we can do, we can just move these here to, so 40's a medium level. So we've got 41 there, 42, and you know what to do in these spaces, don't you? Because if once we get support on 43, a tested support on 43, that means that the market's going to leave this number. So getting in positions here on, just building in here nicely on these guys, and then getting support on this level here, that means that all these trades are safe at that point. We can move this stop up now we can move it up to this low here, because we can count 1 and 2 and 3 and 4 and 5 here. Now I don't know if that should be into here or here. I need to look on the tick chart, but close enough in that regard. There's going to be problems around here, but like I said, I don't have a lot of confidence in this particular correction, but it has come back quite nicely here. This is looking impulsive. We are seeing crude oil push up. We're seeing commodities push up. So I don't have I have more reasons to think that it's bullish than not bullish, at this point. So far as I can see is that we'll just continue to move up, and I think just keep building into this is the way to go. And all looking pretty good on that front. And that brings up, we should also look at RIO and FMG in this case, because we did have a setup for RIO a while back, and that's pushed in. So that's all nice in that regard. So we should just continue. We should just continue to climb. Yes, there will be, there will be resistances where we get pullbacks through all of this. But I'd see them as buying opportunities rather than freaking out opportunities. So keep building into that. And the same with FMG. It was been a little bit sort of shaky. I don't know if anybody's still got the half trade sitting in this position here, but it's still there. We can obviously bring this up into break even here at this point. I'll just leave it there until... the good thing about this is that we've got that 3-wave price action there for that. That was just half a position because I wasn't sure. but we can look at this as all of wave 1 here and back for wave 2 here. So I'm not sure how to treat that just yet. When we still may have an A wave, a B wave, and a C wave coming down here just yet. So we need to be a little bit careful about that, because that would be a reflection of iron ore that we just looked at. But if all going well, that will be there. Just need to see a little bit more of all of this. But one of the things that we can do, I mean, that gap there's the thing really, I guess. We're above the 61.8%, which is the 18. So what would be nice would be to add to this position. Would be nice to get a full position in here. But I'm just not quite sure at this stage what's the best thing to do. Maybe even another half a position, you know. I mean, that range, from this low here, we could look at this as 1 and 2, and that's probably a 1 and 2. At some point here, we're going to get a pullback in here. I don't know if we're going to get it from up here or we're going to get it from here. But that pullback in here, whichever it comes, I think even if we just get another half a position in here, right? So and we'll do it on the 18, okay? So that will at least give us, it won't put too much pressure on us at that point. Let's get a half a position at 18. Because I just got to make sure that we're not in some sort of B wave here. That's what haunts me. Okay, alrighty. I'll just leave it at that. Thanks for tuning in. Cheers.